The worst time to discover you're still an Australian tax resident is 3 years after you believed you left, because that's when the tax exposure appears. And by that time, reconstructing the facts can become very expensive. I'm Vina White, CEO of WellSafe. Let's talk about the real cost of getting Australian tax residency wrong, because one of the most common misconceptions founders and business owners have when they leave Australia is how residency is actually determined. Many people assume that once they move overseas, they've left the Australian tax system. Often, that assumption is incorrect. Residency isn't determined by intention. It's determined by objective facts. If your Australian life still looks like your home base, a home available, family continuity, business control, or ongoing economic ties, distance alone doesn't necessarily change your status. And the ATO doesn't usually assess residency in real time. They assess it later, with hindsight, against the evidence that exists. And this is where many people are surprised, because the assessment often happens years after the move. If residency is assessed incorrectly, the consequences aren't just tax. It can mean years of uncertainty, defensive documentation, potential reassessments, and exposure on offshore income that many people assumed was outside the Australian tax system. In some cases, people discover the problem only after several years have passed. And the longer the timeline, the harder it becomes to reconstruct the facts, because once reconstruction begins, you're no longer planning, you're defending. For employees, residency can sometimes be relatively straightforward, but founders and business owners have far more structural connections: business control, equity interests, asset location, team management, family considerations, which means residency is rarely just a personal question. It becomes a structural one, because your life isn't just personal, it's commercial, and commercial structures often create additional continuity with Australia. The mistake many people make is thinking about residency when they're boarding the plane. But by that point, many of the important factors have already been set. The strongest residency positions are usually built before departure, before timing pressure, before urgency, before reversible decisions are made. In the next episode, I will walk you through what I call the Australian residency trap, and why many founders and business owners misunderstand the tests that actually determine their tax status. If you're serious about control, start with the structure.